GST, One Nation, One Tax. Introduction. Goods and Services Tax. GST is an indirect tax on goods and services throughout India. GST is an indirect tax for the whole nation, which will make India one unified common market. It is a single tax on the supply of goods and services from the manufacturer to the consumer. Thus, it is a destination-based taxation system based on the principle of one nation, one tax. This makes India a unified market for goods and services. GST Council. The GST Council is a governing body which regulates and directs the implementation of GST in India. Its role is to take decisions on tax rates and further implementation measures. Its chairman is the Union Finance Minister. Its members are a nominated minister from each state and some other officials. GST is the end result of a series of reforms of the tax structure India inherited from its British rulers in 1947. It replaces taxes and other levies charged by the central and state governments. It was implemented from July 2017 to simplify the tax structure in the country and avoid double taxation. Calculation of GST. GST is calculated on the value addition made at any stage of goods and services. That is, it is a tax only on the value addition to the item made by the processor or dealer at that stage. Thus, the final consumer will bear only the GST charged by the last dealer in the supply chain. It offers a continuous chain of tax credit called set-off from the original producer service provider's point of the final retailer shop. This is achieved through the mechanism of input tax credit. GST is presently lived in 5 slabs of 0%, 5%, 12%, 18% and 28%. Products such as food, grains, fresh vegetables, newspapers, etc. are taxed at 0%, meaning that they are exempt from any tax. However, luxury items, other products such as cigarettes, luxury cars, aerated drinks, etc. are taxed at 28%. Other products are taxed at rates in between. All items are covered under GST except alcohol for human, petroleum products and electricity. These will continue to be taxed at the rates already in force. Benefits of GST. The best feature of GST is that it eliminates the cascading effect of taxes by removing double taxation. Another advantage of GST is that the tax calculation and exemptions are simplified. Further, taxes are being paid and returns are being filled through a single platform. Tax check posts at state borders are eliminated, thus benefiting transportation of goods significantly. One major benefit of GST is that more taxpayers are registering than ever before. This has widened the tax revenue base, bringing more organizations and people into the tax net. Other benefits to businesses include easier processing of tax payments to the government and easier movement of goods and services between states and within the country. Despite all these advantages of GST, some matters in its current implementation need to be stored out. GST compliance and tax filing, due to its online nature, has increased the implementation cost for small business. Further, small manufacturers with an annual turnover of less than 1.5 crores rupees were earlier exempt from tax, but now the exemption limit has been reduced to 50 lakh rupees. Another issue is the reverse charge mechanism, which is not trade friendly. Conclusion. The long term impact of GST implementation on the Indian economy is bound to be very good. Further, the number of tax slabs under GST may be reduced or more products and services shifted to lower slabs to ease the tax burden and increase tax compliance.